Thank you all again for hanging out with us all day at Crossroads. It's been absolutely tremendous to have such a great turnout. And I'm really delighted that we've got one of the best panels of the day for you here at the end. DeFi is something very, very close to my heart. It's so far the main use case of crypto. We can talk about new things happening and great new innovations, but fundamentally, DeFi is the biggest use case that we've found. So today, we've got a fantastic final panel for you. Can I get both of you just to introduce yourselves and your project and kind of what you do every day there?
Yeah, for sure. Hi guys, I'm FA2. I'm from Ranger Finance. Ranger is a pub dex aggregator on Solana. What I mainly do is a lot of strategy, research, as well as just running the whole team. Yeah.
Hello, I was just up here. I'm Chris, one of the technical co-founders of Drift. Drift's a super protocol on Solana, does perp trading, borrow lend, vaults, prediction markets, the whole suite. So hyped to be here.
Excellent. Yeah, and welcome back, Chris. Thanks again for joining the
Thank you.
stage. So the Nasdaq of crypto, this is Toli's North Star. This is the dream for Solana. We've got speed, we've got low fees, we've got a deeply maturing DeFi ecosystem, and we're probably the closest chain to reaching that Nasdaq on the blockchain mentality. My big question today is, are we building there? How close are we? What do we still need to solve? And how do we get there? So my first question for you, I'm going to set the tone. Are we becoming the Nasdaq of crypto? Are we not there yet? FA2, I'll start with you, just because you're closest to me.
Oh, me? Yeah,
sure.
Yeah, so I think like Toli probably put this out back in like 2022. And ever since then, like it's really been a very good metric for a lot of teams to really focus on. Are we getting there? We definitely are. I think not in terms of like metrics wise compared to like the traditional markets with just a tiny drop, but as compared to the whole crypto ecosystem, I think we're one of the best. To actually build like the Nasdaq of Sol, I think there's a lot of key infra in play, there's a lot of key markets in play. I think over the last 3-4 years, Solana has built its core infra from dexes to perp dexes to lending and borrowing, etc. And I think what we need right now is really pushing out further into the bigger markets, into outside of crypto to actually tackle those few key areas. Yeah, I think other than that, what we actually need as well is the middle layer, because the core infra has already been built. So what I mean by middle layer is that you have to compose on top of what you already have also, and really just improve the tech from there. So yeah.
Yeah, I would say we're honestly pretty far away from NASDAQ on chain. I think the way I think about it is right now blockchains are really good for the long tail assets that are kind of spun up permissionlessly, because blockchains are great for allowing anyone to come in and make those assets. I think, and then how I think about assets in general is kind of like a pyramid. You have this big base of long tail, like a lot of shit coins, meme coins, etc. As you move up the stack, you start getting maybe more closer to businesses, and at the top, maybe you have things like Bitcoin. And the issue right now on Solana is you can't really trade Bitcoin in a way that's as competitive with the centralized like competitors. And ultimately, in my opinion, the reason for that is like the performance on the blockchain still just isn't good enough to offer that type of execution and trading. So you look at something like Coinbase, you go look at Bitcoin, like the spread's going to be one tick, which is like what, couple cents or $1 or whatever. It's really hard to do that on Solana just because the performance isn't fast enough and market makers get picked off too much. So I think in the long run, it really is exercise in IBRL. Like the chain needs to keep improving a lot so that market makers can provide better liquidity. And then in the short to medium term, it's on the app teams to like keep making the experience better given where the tech's currently at. So that's why, yeah, Drift's launched Swift protocol. We're trying to make trading faster and better in the interim. But I think the long run to get the NASDAQ on chain, you need Fire Dancer, maybe MCP, like these big protocol upgrades.
Yeah. So just touching that, what are the kind of metrics and milestones that we would need to reach specifically? You mentioned MCP, you mentioned IBRL. We want to reduce that latency. What are the kind of key tipping points that we would arrive at that you think we're here now?
I mean, I think the indicator is if you just look at the spreads on the big markets, if they're competitive with Coinbase or NASDAQ or NYSE, then you know we're here. So part of it's just like maturing MEV supply chain. Like, can searchers, like, we need to make it so market makers can quote really tight. And like, there's so many different factors into that, but I think you just look at execution on Solana versus execution on Coinbase, and that's kind of like your indicator.
Yeah. Okay. I think other than like the infra layer itself, above it, I think on the user level as well, there's a lot more nuances that we have to fix as well. So top like level, as you compare against your centralized exchanges or Binance, it's so much easier, you know, for you to navigate yourself around like the centralized exchange as compared to Solana right now. So there have been like improvements like Privy and stuff, but I still think there's a lot more fixes or rather improvements that can be made on a user level and on a UX level, especially when it comes to onboarding users on chain.
Yeah, excellent. And so we talk a lot about the Nasdaq. What are the core pillars of the Nasdaq? Is it speed? Is it liquidity? Is it transparency? Is it regulation and readiness? Is that something we need to be taking greater pains to achieve sooner? What have you guys developed within your own protocols that kind of get us there specifically?
I guess when I think of NASDAQ, it's probably a combination of like, okay, the assets you're trading. So ideally, all the assets that go on chain are, not just crypto native projects, but RWAs, like more traditional companies like stocks, et cetera. So I'd say that's one dimension. And then the other dimension I think about is like the performance and the execution quality, and like getting to that level of like, even though we're in a decentralized environment, you're still getting like the same level of like guarantees on price and whatnot. On the drift side, like, we basically try to architect our system such that we can list on like unlimited number of markets. So preparing for the world where you have all these assets on chain. It's obviously like anything with margin or leverage, like borrow, lend, and derivatives. It can't be purely permissionless, but like preparing for that world and trying to be able to support as many markets as possible. And then, also pushing on the performance to keep just squeezing out as much like execution quality from the chain. With Swift is another thing we're doing.
That's you?
Yeah. So I think the maybe another two aspects I can touch on is that the liquidity side as well. That's first. So I think it's all just a flywheel effect, right? If on chain the market makers are more incentivized to market make on chain because there's so much more users on chain. So it's more like a flywheel effect. Like the more users you get, the more liquidity you get. The more liquidity you get, the more market makers you onboard on chain, and leads to more users as well. So I think the flywheel has always been an area where people try to focus on, but as long as you focus on like one part of like the flywheel, which I think is still the user base, as long as you get more users on chain, things will start to improve generally. I think in terms of regulations itself, is there's two sides of the coin, right? Like it's either you be regulated or you just be unregulated, right? So going the unregulated route, like I mean, the biggest companies in the world, like usually they just go through like the gray area first before things start pounding down the door, and then they start becoming more regulated. So I think in crypto as well, like we've seen that like over the past 3 years, I think we'll definitely see like an RWA wave probably coming in the next few months, and whether or not that's going to be regulated or not, there's a lot of regulations coming in. There's regulated issuers coming on chain as well, especially on Sol. They're doing good works there, but to actually, I think for the first wave to actually take off, it has to be permissionless. It has to come unregulated at first, and I think if someone actually tackles that properly, you'll see a huge effect of RWAs, especially on Sol.
Yeah, excellent. So we do have this Nasdaq vision, and we're trying to achieve this institutional grade trading platform, but we have to acknowledge that the majority of users at the moment are regular people. They're retail users. They're trading meme coins, and that's kind of the basis of the Solana ecosystem at the moment. How do we balance the existing community with the goals that we want to achieve and make sure that everyone's fairly represented and that we're all aligned going in the same direction?
Yeah. Okay. So I think to me, okay. So the way we've built like Ranger Finance is that there's a lot more demand for APIs like from builders as well from institutions lately, and I think a lot of the reasons for that actually comes from some of them actually trying to test out, hey, is it better if I quote it on-chain against a centralized exchange? But in reality, currently, right now, it's not it. Like we have market makers, we have firms telling us that, hey, it's pretty hard to run strategies on-chain because the codes are not as good as Binance.
Yeah.
So I think the main focus right now is trying to focus on the retail and users at the start, and that comes from a whole different angle as compared to trading and building for institutions. So I think once you properly create a good product for retail to come in, I think your market makers will be more than happy, and institutions will be more than happy to actually do market making on your product, as well as do some strategies on your product, because there's flow coming in from the retail side of things. Yeah, I don't know what you, Chris.
Yeah, I think that we're trying to build things that just like are generalized like financial infrastructure. So while a lot of the trading does happen on meme coins, like there's other use cases too where, for example, we see a lot of like savvy users that come in and use different yield generating strategies, whether it's borrow lend or vaults, to basically earn yield on their different assets. And what we're finding now is like when more institutions try to come on chain with RWAs, they actually want to tap into that user base, because that user base represents liquidity for them to basically loop back into their RWA strategies. So I think there's an element of like what we're building already kind of scales to institutions, and now it's just like getting like help holding their hand and getting them to deploy on chain. So one thing we're doing with our isolated borrow lend pools is there's some RWA issuers that are coming on chain, and we're helping them to tap into like on chain USDC and other stablecoin liquidity to kind of run looping strategies with their RWAs. So I guess like, yeah, the main users a lot of meme coin trading, but the infrastructure is like getting better, and it can work with anything that's like an SPL token, right? So it's just like having the faith that these other people are coming on chain soon.
At the moment, we have a real second mover advantage. That the Nasdaq has already happened, it exists, and now we're coming up to challenge that, and we can try and correct a lot of the mistakes that they might have made, or unfairnesses that might be baked into the Nasdaq structure. How are you guys in your respective protocols kind of avoiding that and making sure we've got order flow, we've got fairness, and how do we make sure that we're avoiding hidden order books and opaque routing and things like that?
Yeah, I mean, I guess for me, part of the reason I've always been attracted to DeFi and crypto is it's open source, bottom up, transparent. Like really anyone can come in and like start understanding how things work and slowly gain access. I think the vision for crypto is just having more access, being more permissionless, like anyone can come in and launch tokens. So I think as long as we keep that like ability for things to evolve bottom up and anyone can come in, I think it's an improvement over Nasdaq versus obviously Nasdaq is heavily regulated, like there's less assets, etc. Bit more opaque. So
Yeah.
I think it's just kind of sticking to the OG DeFi values, even as we try to scale things up, because sometimes scaling and the OG values aren't always like perfectly, aligned, but you got to keep it enough where it still is like it gets those improvements over the old TradFi systems.
Yeah.
Got to?
Yeah, I think transparency as well. Transparency in general is really like the core ethos of like where like DeFi was born from, and Nasdaq as well. Not just Nasdaq, right? Like different like markets as well in general. Like if you want to get listed, there's a lot of requirements for you to get listed, and some of it is like it's not transparent at all. And if you know, then you know the requirements, and usually itself like it takes a toll on the firm, it takes a toll on the team to actually meet those requirements, regulations, or be like liquidity as well. I think in general, like having the openness, letting the market actually decide for whether you're actually ready for the market itself. I think that really is like a better and healthier factor as compared to what used to be the opaque regulations, as well as what you actually need to actually get listed. So yeah.
Yeah. How do we think about regulation and compliance when we talk about Solana as a Nasdaq? Because we have an inherently permissionless system. The SEC has come out and said that meme coins are not securities. How do we kind of balance that there? How do we ensure that we're staying compliant and permissionless moving forward?
I think for me itself, like okay, maybe because I'm Singaporean, maybe I'm Asian as well, because I don't really like the way the way I like to believe it is that, you know, like, hey, let's just build, you know, they will come, users will come, but also regulations will come. But once it comes, you know, then obey. But at the start, I think in general, build as much as possible, as long as it's good tech, as long as you get more builders on board, you get more users on board. Yeah, it's permissionless. Anyone should be able to trade on chain, you know. Yeah, and until that happens to maybe Ranger, then, you know, we'll start doing something about it. Yeah.
Yeah.
Yeah, I mean, I think what ultimately happens is there's probably different layers of DeFi. So there's ones that are more less regulated because they're considered more decentralized and it's a little bit more of a sandbox and you can do whatever. And then there's also going to be a regulated layer where if you want to trade against like really big institutions that have a lot of regulation, like you're going to need to comply with whatever regulation that those entities are, you know, under. So I don't think it's like either or. I think they serve different functionalities. It's just like almost like enough people going on chain and it being valuable enough that the regulations like and regulators take the time to figure out how to make it work such that both can coexist. Because obviously right now or historically it's kind of just been like technically it's all illegal or whatever, but everyone still does it. Where now it's like ideally it'll be very clarity like, okay, if you want to interact with the regulated side, it's this, and if you want to be in the more wild west decentralized side, it's like this. And like I think you'll see both, and there's nothing to stop a blockchain from supporting both.
Yeah. We mentioned IBR a lot. I want to kind of swing back to that. How fast is fast enough? You know, we're already talking about sub 100 millisecond trades. Are we going too far? At what point do we hit it and we say, you know what, we're good here? Yeah. At what point do you think high frequency traders want latency to arrive at?
Yeah, that's an interesting question. I think the speed is important, but speed's not the most important thing. I think it's more like almost the transaction supply chain and how market makers and arbitrageurs interact with each other. So right now on Solana, like the arbitrageurs are really OP and have an advantage against the market makers. So then the market makers have to quote wire and the execution is not good enough for users. Liquidity's not good enough. So it's like trying to make things faster is kind of just like a blunt way to try to make it fair for market makers, because then maybe market makers can compete in getting their transactions in and like updating quotes faster. But there's definitely solutions where like Solana block times don't get faster, but like the MEV supply chain changes in a way that like the liquidity is better, and then users don't really care that the blocks are half a second and going to 0.1 seconds doesn't really matter. So it's like I think RBRL is just like kind of the obvious direction to move in to make the MEV more palatable, but there might be other protocol changes like MCP, which is like super speculative, I think. But like maybe you could do that and you don't have faster block times and it's still good enough. So I would say it's like kind of reducing like value extracted by arbitrageurs, and IBRL is just kind of one way to maybe do that.
Yeah. 100%. I think like in general, right now there's really like as a perp aggregator ourselves, like we see most of the flows like actually going to drift. So like in terms of I think rather than you know like like the first part of IB, right? Like I really think like we have to increase like we have to move into that direction as well, because like for ourselves, like we're also facing a lot of issues in terms of like compiling transactions, compiling instructions, because yeah, we need more block space. Firstly, that's one. We also need to like just increase the bandwidth in general, like for traders to actually get coded at a faster rate.
Yeah. This might be a biased take for both of you, but what's more important to Solana DeFi growth? Is it spot DEX volume or is it purpose volume? Where do you think there's a greater vertical for growth there for the ecosystem as a whole?
Yeah, that's a great question. I think like, okay, I think in general like a lot of the volume from Sol just comes from meme coin trading, and there's I think there's a lot more room to grow in the perps side of things. Maybe bias take maybe, but uh, the reason for that is because like we've seen other chains, like previously in the past, like your DYDX, your GMX, your yeah, Hyperliquid recently as well. So I think in general, like you've seen the power of perps coming to to the chain itself. Even if you look into like centralized exchanges, right? Like perps actually drives like most volume other than the Korean exchanges. So yeah, I think Solana perps is just a drop within the rest of like the ecosystem, and I think if we can do much more there in terms of like innovation, in terms of like more liquidity as well, it really will create a different kind of ecosystem and a newer ecosystem, I say, where there's a balance, or rather like there's more volume from perps as compared to like spot.
Yeah.
Yeah, I guess to kind of tie into what I was saying earlier, I think we need more trading of like bigger assets. I think Solana's done a good job of capturing the long tail when the long tail is hot, but that's obviously like more cyclical and market conditions versus like people are trading Bitcoin, Solana, all this stuff nonstop, huge amount of volume, and it's just maybe not competitive enough on Solana. And really, the reason why perps volume isn't as big on Solana as maybe some of the meme coin trading is because these are these larger tail assets, so people have higher expectations on what the execution quality is. So I think across spot and perps, we need to be fulfilling like users' expectations around trading things like Bitcoin. And that's obviously like a big focus for Drift. That's part of the reason we launched Swift, and it's like kind of the top focus for us. But I think as a whole, like ecosystem, we need to think about like how do we move towards serving like these more mainstream assets and being competitive there.
Yeah. And I think that's an excellent segue into our next point. And Solana perps has come a long way, right? We've come tremendous distance in the past year, but I checked on the way up, and Hyperliquid is still doing about 8 times the volume of Solana perps at the moment. And a lot of that is due to the fact that they can bring on assets like BTC and like ETH and trade that kind of natively, more or less natively, let's say. How do we close the gap? How do we close the gap on a platform like Hyperliquid that is really designed specifically for that?
Yeah, so I've kind of been repeating myself, but it's improving the liquidity. The advantage Hyperliquid has, obviously, it's like smaller leader set, more co-located, so more throughput, and has an order book, which can enable good liquidity. So like for Solana, and for Drift, it's continuing to make these tech upgrades that enable us to provide competitive liquidity with Hyperliquid, but also sexes in general. Solana has a way bigger leader set, so it's definitely like an uphill battle. The easier path would be to just do an L2 and do like a smaller sequence set, but if you want to actually do like a blockchain, you got to figure out how to make it work on with like a huge leader set. So what we're doing in the short to medium term is leaning into these just-in-time liquidity RFQ style models because we think they'll work well and let you get filled at good prices. And then at the same time, it's like the whole ecosystem needs to continue to push for these designs that reduce value extracted by arbitrageurs and enable market makers to provide better liquidity. So I kind of see it in like there's what we're doing immediately, assuming nothing changed about Solana, and then there's like a longer term as like more like the lower level infra continues to improve, and then maybe you can bring things like order books back on chain that are really competitive, and then that would be amazing. And then you could really offer the identical experience to something like a Sex.
Yeah, 100%. Yeah. So I think like again for us, like we also took quite a while to integrate Drift as well because it's a proper cloud like based system, especially on Sol, as compared to the AMM models. Like I think like back last year, like Jupiter, released the perps in an LP AMM model, and then like it got open source. Flash is doing it. Adrena is using the same one as well, and yeah, in general, like for you to scale perps, that is not the way you should build perps. It should be like a club. I'm a huge club fan. So but I think one way, one of like the other ways where we can compete in terms of volume as compared to Hyperliquid is really just offer a different set of assets, which I think again repeating myself. So like RWAs, bringing RWAs on chain. We've seen Ostium, they're doing a lot of good volume. I think if Solana can bring in RWA assets for spot, but as well for perps, I think it will bring a whole new different era of trading. Using using your Tesla as collateral on Drift, using sort of this kind of assets on Drift, which opens up, different verticals and the horizontal pillars of trading.
Excellent. Great answer. Well, that brings us to time. Chris, Vasu, thank you both so much for being here. Thank you for sharing your insight with everyone. One last round of applause for our wonderful panelists, guys, and thank you very much.
Thank you, guys.